Hello traders at CMC Markets. This is Trevor Neil of RRG Research. Today we're going to look at the euro and the sterling. We'll start with a relative rotation graph looking at the cable and the euro. But one comment, I was sitting on a panel just over a week ago and the subject of it was technicals versus fundamentals in the foreign exchange market. All of the panelists were bearish for the dollar for 2024 on the basis of the longer term downtrend channel. But I did point out that we had this year in 2024 moved up through the channel and we were actually at the top end of the downward channel, and that in the dollar index, and that it potentially could be ending that downtrend and breaking up, and that did happen. I wouldn't say it would, but I said this is the point where that downtrend channel could be ending. So what we're left with now is, in the case of sterling and the euro, here's the dollar here. They're both left of it, weaker than the dollar. The dollar is stronger, and they are in the improving quadrant, looking okay, but definitely the dollar is strong, and all the other currencies, major currencies, are over on the left hand side here as well. So let's look at the euro first. This is an hourly chart of the euro, but I brought in a lot of data here to show the context. We have broken down from this trading range, which was, we'll call it, from 109.85 down to 109, around the figure, and we broke down and we're in a sort of downtrend there. I've drawn it with the dashed line because it's not that well defined. We've also taken out this low as well, and I just want to make the point, the space from here down to the next really good support level at 108 is we moved up through that very fast, and so we can move down through it very fast. Now let's zoom in a little bit. Is this fall in the euro going to turn into a plunge? Now here is the breakdown from the big trading range with 109 at the bottom, and we've come down, we've got lower highs in place here. We've got low, lower, low, lower, low. Here in the RSI we've got a bullish divergence in play here now. So this indicates we might be ready to move up in the market, that this might be the low here. This is an hourly chart we're plotting now. If we do rally, then I think 109 would be a very strong resistance point. So that's the extent of it if this current white candle improves. But I think the upside is limited, and that would probably, the next trade is a new short trade around that 109 level. So if I'm right, we may have a temporary low in place here. I am definitely wrong if we break through the 108.57 level, and particularly if this rising RSI line is broken. But watch out, shorts, we could be at the intermediate term end of that fall. Looking now at cable, and as I've been preparing this, the inflation numbers have been released in the UK, and once again economists have done their best to add to market volatility by getting their estimates wrong. So the numbers come in hot, and we have turned up in sterling strongly, right at support. So let's look at the origin of this support and what it means. Now this level was a hugely important support level, 126.10 area here, and we were testing it, and massive range. This is the bottom of the range. Top of the range really is at 127.90. There's a spike up above to 128.27, but we've got a low this morning here, and also it was a sort of minor area of support back on the 5th of December. Now if we had broken it, then look at this candle here, and so we rose very quickly, we could have fallen very quickly. So emergency averted, I would say, for this one. Thank you for the economists for helping do that. Obviously, given what we've just seen in the euro, this is an interesting difference in the direction. So this will be an improving sterling versus euro sterling. Why does this leave us? It leaves us really back inside the range, still close to the bottom of the range, but it looks as though it's going to rally a bit further towards the middle of the range, which is around about 127. So how do you play that? Having already come up, there's a little bit of a sell-off here. If it were to extend, if it were to pull back to 126.45 area and stabilize there with some white candles or some shadows below, then you've got a natural protection level here below the 126 level, say 125.92 area, and look for a move back in towards the top of this range here. But it's not a particularly attractive risk reward ratio, and you are moving into an area of substantial resistance. So I don't really like it, although I think it's going to happen, and it's buying into resistance.